Great, great and beautiful morning to you all, wherever you are joining me at this hour. I say welcome to 108th edition of Investdata Trading Academy Live with Ambrose. I will tell you that the market, as usual, has remained in the misdirection. But before I go further, I will say welcome to a new month, and I know that the market this month is also trying to also look, I would like to look also look mixed, going to the month. But on the strength of what we saw in the global market in the month of July, we saw that the global market resisted decline and rebounded powerfully in the month of July. Why, if you come back here home, you're looking at the market here, our market extended a kind of correction or pullback despite the positive earnings that we've seen so far in the market. But I believe that that's no earnings that we've seen in the market as it was also impacting the market positively. But when we come to our local market, we'll discuss more of that. But as we speak now, I'll tell you that the market is mixed globally, as I've said earlier. But in Europe market, we're seeing that most of the market there are in green now, despite the fear of some economic news coming from Germany and others. But still, the market open on a positive note for the new month. In the midst of earnings expectation, especially the banking results I've seen so far also in that climate has also supported the market. Even in the midst of oil price trying to also to pull back. For me, it's a good one for the start of the month for Europe market. But US market also at this hour, I'll tell you most of the indices in US market are looking red. The mixed market to other also. In Africa here, yes, the market is also mixed in that direction. Here in Nigeria, as I said earlier, our market is open on a red position or a negative note to start the month. But this just at the beginning of the month, we believe that we'll see more. Then in Asia market, see mixed market also, or in the midst of expectation of OPEC meeting output and all that, we are seeing the odds one playing out in the market as we speak now. But oil price, I've said earlier, has pulled back, trading around the $103.2 per barrel at this hour. And when there is a kind of pullback in oil price, it's expected that it also rebound because of what the distortion in supply. But the fear of a weaker demand from China and India has also put the market there, and also in Japan. These are the factors that are kind of slowing down. But we believe that also in OPEC meeting, where there's kind of a controversy or kind of debate of retaining Russia as part of the, but knowing that Russia is part of the big chunk in that association, they are still believing that Russia will still remain. But on the outcome of the meeting, we will know exactly where they are heading to. But I believe that OPEC too also may also likely to kind of increase the output, but it depends the outcome of the meeting. But let's just wait and see the outcome. That also give us a full light on where the oil price is going. But as far oil price remain above $100 for me, it's a good one for oil producing country. And if we go further up, that's a plus for them. But if we come back here in our market, I will tell you that the oil price have not supported our bottom line in terms of external reserve as a nation, because for almost the whole the month of July, we saw that the reserve have dropped from almost $40 billion to around 39. Tells that we have recorded a decline of almost a billion from that. It tells that despite the oil price, is it because we are not producing to the quota, or is it because of the way we are using money to manage our FS? All these are what investors are looking at. Also, economic managers, analysts are asking that economic managers also sit up and give us a good direction in terms of what our resources, in terms of management, and this high exchange rate is also alarming, strengthening the economy, and also plus there is some risk about insecurity here and there. That's why you see a lot of confusion among investing public. Some are saying, oh, they want to sell and hold cash. Some are taking it as an advantage for them to want to buy. But I believe that once it becomes clearer where we are going as a nation in terms of security and this FS management of CBN and all that, that will also give more confidence to investors in our local market. But I believe that the earnings that we have seen so far, for me, is a good one, especially from those that are what we call the energy NGS 30. And I've said that most company in that category, performance has lost so far in half year. There is the first 6 months of need to call it. That shows that these companies are really done well. And also, like I said, one of the fora that before now we have seen that the percent of foreign investors has moved our market up and down. But now our market have rallied for almost 3 years now on the strength of what companies earning and high payout and these have attracted the institutional investors, which are the main player in this market, the PFAs and others, to play in this space, and that has not changed because the numbers of most companies on the exchange have shown that yes, we are they are heading somewhere for the end of for the financial year 2022. If that is achieved, I believe that this market will remain in this realm and in this direction, despite the pullback. See the market rebounding very soon, especially when the big boys or the PFAs or the smart money start coming back after they have done due diligence on this number that released so far. That also support the market to also to bounce back powerfully. We saw what happened on Friday. After most of the stock have pulled back, we saw a rebound because of what the price become attractive. Most of the stocks are already on their oversold region, and also they are undervalued. And knowing this, that PE ratios of most of the stock and even the market is still relatively low, that attracted the fund. But I believe that that fund might not sustain it. That will actually tell people that they should not be afraid of good trap. But when we are buy into solid companies, buy into something that has good fundamental, and also that has that policy of kind of dividend collection policy that grow their dividend every year. That's where you should also build your tent as you are looking forward to see the end of the year by God grace. But I believe that what we have seen so far in Q2 is an insight of what we expect going to the future, because we have seen the impact of high cost, trying to reduce the bottom line of these companies at the end of the day. But I believe that yes, those that are very prudent in managing their resources, that those companies have able to manage this so far in this period. If that is sustained going to the future, we will see a better numbers at the end of the day. That is what I'm expecting in this market, going to the future. That means every investor in a market here locally should just exercise patience and invest in good solid companies. Also look at their fundamental, look at their technicals. You need to know what is the investor sentiment as regard this performance. That will be a better way of investing. Don't rely fully on your fundamental. Don't rely fully on the market. See, read the pattern of people in the market, the psychology of people in the market. That will also guide you to know where to be in the right position or not. Don't just follow the bad wagon, but rather invest with knowledge, and that is why this class is on, so that you'll be guided to know what to do per time. For me, there's no cause for alarm. I always say it. People say why, but see this morning we always see kind of a pullback because of what? Because of some stocks also looking down. For me, it's not a bad one. It's part of the market. But stay in good stock. No matter the oscillation we're seeing, the up and down movement, still we're going to see the market breaking out. The 2000. If the PFA start coming back to the market, because if you look at their own performance for year to date, or January to end of June, I see that they're also able to grow to grow their performance or their return for almost a billion for that space. For me, it's a good one for the PFA, and that's also have a way of impacting the market, because they see that the market where they are playing the fixed income market, where they are fully most of their return there remain negative, and for that they see equity market where to balance their portfolio, and most of them that have consistently paid dividend and where they play, and that is the criteria for them to invest for. I see opportunity in that regard, and that also have a way of supporting equity market once they start coming. There's no cost for alarm, but let's just keep our finger and invest wisely. Yes, today, because of our time, we'll look at some companies' numbers. But before we go into technicals, I want to look at few companies' numbers today, and that I want to look at what the result of Nestle that was released to the market, so that you look at these are the manufacturing sectors where we have seen that the the high cost have really eaten to their bottom line. After seeing a fat top line, I've seen a thin bottom line, it tells you that something is wrong somewhere. But we can see that some company there are really showing us some figures to kind of give investor a hope that yes, going to the future we might see a better number. If you look at the Nestle top line, I will tell you this is a good one for the company. That's why there was a pullback, and that pullback made that stock attractive. And don't forget that the institutional investor, sorry, the major stakeholder has continually improved their shares in it by buying on the floor. I mean, now Nestle in Switzerland has continually bought for the past 2 years. Before they are buying, I'm sure that there is also opportunity in this market, and also opportunity in the company, and also trusting the nation economy. Despite the security we are having here, they are still increasing their investment here. It's also a good way to say that yes, this will have confidence in our economy despite what is happening. Then, before I go into this what's it called? Nestle, let me quickly look at the economic data that was just released recently by Stanbic IPTC, report that came about the purchasing manager index for the month of July. This is a great an improvement if it is sustained. Compared to what we saw in the month of May and June. But since July 1, it gives a sense of direction that yes, despite the increase in interest rate that was done in May, that spilled over in the month of June. In July, after the try to find direction before the last increment, but still, we also saw that the MPR, the MPI also was up to 53.2 point. For me, it's a good one from 0.90 or 0.50.9. For me, it's an improvement that the private sector, despite the increase in cost, they are still seeing they are expanding their business. Their order process are also improved. That is that yes, in the midst that means they are currently adjusting to this high cost. But I believe that it has a way of also impacting the banking sector. If the private sector activities remain up, I mean the economy, is also looking a bit, let me say, remaining in that trend of expansion, but still on a weaker movement. But for me, it's not a bad one. If we are seeing this figure, it's a good one that the industrial aspect, which is the most important, because I tell you that without economy, no politics. If the economy is going to fall, let's study this trend and see how far they go. But for improvement from the month of June, for me, it's a good one. Compared from the decline we saw from May to June, but now we're seeing an uptrend. Can see that the economy is moving up and down. But I believe that this figure that came today, 53.2 point for the month of June, for me, it's a good one. Don't forget that also the Q2 number we've seen so far have kind of giving us an insight what happened in the Q2 of 2022. We saw increase in cost that some companies have reflected that, but still most of their numbers are positive. That means we must also remain in positive in terms of GDP, but might see little contraction or little contraction for that second quarter. But this is a new start for the third quarter. The month of June, we're seeing a kind of expansion in industrial productivity from the figure we just saw from IPTC according to their report. It's a good one if it's sustained in the month of August and September. Then the month of the third quarter will become better than Q2. But let's wait and see. But I'll tell you that on the strength of the figures we're seeing so far, I believe that Q2 also will maintain a positive trend, like what we saw in Q1 GDP. But it might be on a little marginal decline. But let's see, wait and see the figure from this Bureau of Statistics and also from CPN to further support this one from Stanbic IPTC. It's a good one for us to start this month of August, seeing this kind of economic data plus the earnings we have seen so far is a good one. But let's see, look forward to see the figure, inflation figure, which we know this inflation has the way of also influencing decision both on the on the side of market players and also the investors, because everyone is looking at where is fund flowing to. If fund is leaving equity market, leaving capital market for where there's higher return with less risk, or some also hedging their the inflation against inflation using equity that will deliver more than what inflation is. This are we playing out. We're also going to property business, which are the property companies that are on the exchange. Because I tell you, property is also another way of hedging against inflation. Which companies on the exchange are into property business? What is their number? How are they going? If they're where this is going to play on a property business in Nigeria, that at the end of the day, we start seeing a better number from this sector, this company that into property business. These are the things you'll be looking at. Going to the future between now and the 31st of December, it's also a long period. A lot of it can happen, but let's see how it goes. But be guided with fact and figure, and also let what market sentiment or psychology of investor always guide you, and also follow where the fund is going. If the fund is leaving some stock to another stock or from sector to another sector, follow that sector that fund is in. That's why we need to know which sector will survive in this kind of period, which sector with the policy change going to impact. Once you know this sector, like what I did earlier, or later month of June, where I take you through the circles in the economy, circles in the market, and circles what in the pattern. If you understand that, it will always guide you at any given time, no matter the economic state you are, no matter where the kind of market, either bullish or bear, or the market is overbought, oversold, you know exactly what to do, because this is going to guide you in taking what your investment decision, no matter which stock you are trading, because I tell you what happened in the general market has the way of influencing also the smaller indicators or smaller indices, and also individual stock or industry. But when also industry is having a positive sentiment, it has the way of influencing companies in that sector, and also the numbers from there will also look up or look down depending on the policy that is also impacting that sector or industry. So I mentioned looking at the number that came from Nestle. This is one of the defensive stock in that sector, and also the price is also one of the leader in that industry. But we want to look at the number that came from Nestle. It moved from 117 point, the top line, which is the revenue, 171.44 billion to 222.45 billion. You can see representing about almost 30% up for that full half year result. For me, it's a good one. In that direction, the PAT, which is the earning, moved from 21.72 billion to 21.73 billion to 27.75 billion, representing about 28% up. You can see that this is very, very attractive. For me, it's a good one. And also, the earning per share for this period is at 35 naira 10 kobo. It's a good one for this Nestle to start with. But yes, the price might be high, but I'll tell you that the performance is not a bad one. Also look at the company profit margin for this period, for this year financial year under review, is 12.48%. And those that are in our class about 2 weeks ago, where we discussed how to know the kind of earnings that's outstanding. You want to know the value of the earnings quality. Sorry, you want to know the value, the growth, and also the quality that earnings. But if you look at number matter from Nestle, I'll tell you this is a good number to reckon with in that industry. For me, it's a good one. For me, this is a good start also for Nestle. Let for the financial year. That is why you can see the essence of looking at this figure to give you an insight what to do, and that is a very good way to start when you are doing your analysis. If you go up also, want to look at what is happening in also in Presco. These are companies I know that they are into manufacturing companies, sector. Look at the number that also came from Presco. This number is also attractive. The one that came from Okomu was also good. Okomu number as we speak, it's almost the earning per share for half years about almost 17 naira. We are seeing also 7 naira in trade dividend. But that of Okomo Presco, we are looking to see if dividend go. But I believe the number we are seeing. If you look at the third quarter forecast of 13 billion, they already meet that 13 billion in what in their Q2. It tells that you expect more better number in that Q3. Also don't forget that this company just acquire also another company in the same business to expand its market share. When it also start impacting on the bottom line, because during the acquisition, we might know that that the company is already are breaking even. That means we expect that the performance now company also to start impacting on Presco going into the future. But don't forget that when you are doing acquisition, we are spending money, but it's good that we build capacity. I see potential in Presco going to the future. But if you look at the number that came from Presco for half year, the revenue or the say what do you call turnover moved from 21.446 billion to 41.71 billion, representing about almost 94 point something percent up, 94.3% up. For me, it's a good one. And also the the PAT moved from about 10.13 billion to 13.47 billion, representing 33.06% up. Any per share of 13 naira 47 kobo for this period is a good one for me. But the only place also, if you look at the what we call the profit margin for this period, for me 32%, it tells you that this is also a good one. Tells that the company is well run. Despite they are acquiring company, they are expanding. We are seeing a better number that will support their future prices. And now that it has pulled back to around 148, 158 or 154, around that range, for me it's a good one, because with this number you are sure also that this stock price will still go further up. And don't forget the sector you are paying that the demand for their products is also high, and not only within the Nigeria, outside Nigeria. And also don't forget that the healthcare sector has also had high demand for the palm oil. For me, it's a good sector that we also look at. That means if you are now kind of do your sectoral rotation, your position, your portfolio, look at area that you look at. These are one of the sectors that you want to look at, and this is what I want to also look at. But if you also look at the number that came from GSK, which I believe we have not discussed here, GSK number 2 was not too bad. So that of fixing also was impressive. For me, GSK number also moved from No, their top line moved from 9.36 no 9.36 billion to 14.81 billion, which is a good one, represent about 50% of. Also, the bottom line moved from just 59.97 million to 349 5 million. For me is a good one. That is sweet, almost 400 and something percent up. Good one. Yes, might say that the what we call the earning per share is still small relative to the price, around the 30 kobo for this period. Let's see how it's going to do it, and for me it's a good number, it's a good start for them. You can see what cost also doing in that place. That is why you need to also keep your eyes in this kind of stocks, especially in the healthcare sector. But I told you that what happened in fixing was also fantastic. That also keep your attention, to that healthcare sector. We are seeing improving number coming from that industry. Also for Julius Berger, turnover moved from 146.39 billion to 218.22 billion, representing about 49.15% up. In that direction, PAT maintained an uptrend from 4.75 billion to 5 point, let's say 6 billion flat. No, from that represent about 27 or 28% up for that period. Earning per share of 3 naira 75 kobo. On this earning per share, you can easily forecast for the full year for Julius Berger that with this strength on this number, might likely to see a better number. Seeing all the new contracts being signed by even River State and others, with this company. Like I told you earlier, that this pre-election year, we expect most of the uncompleted project by the government, state level, federal level, local government to be completed, and I believe on that. They should feel more inflow to Julius Berger for them to complete this project. That was going to reflect on their number. And at the end of the day, we'll see a better number. Don't also forget that they also diversify into agriculture sector. Also, they have a major also role playing in oil extraction. For me, you can see it on their number that Julius Berger has focus and where it's going. Despite the seeming fear in the economy, I believe that as far as we're having a infrastructural problem, both in accommodation, which I mean, all these have a role playing in that company. I see it as a good one for Julius Berger. From here, you can see that any per share of 8 naira or even surpass 8 naira, at the end of the year is here. And that when a company is making 8 naira, the 2 naira 50 they pay for me it will be like a joke when we are making 8 naira full year. That means investors in this company that are thinking long term, we expect a dividend around the 4 naira if a company is posting 8 naira as earning per share for full year. 4 naira, 50% of their position is likely to go. So when they end about 5 naira in 2021, they pay you about what 2 naira 50 to go. You can see the dividend policy, which you can actually see if you are taking advantage of the pullback in Julius Berger to around 25 naira 90 kobo. You buy in it, then you also see where you are going. Even though you are investing for the, that's why I said when the PFA start coming back, there are some stuff that they will not look away from because of those companies consistent in their dividend payment, improving in their performance, and also the sectors where they are operating. That will be where they put in their attention, and that is how to go about investing. And this is how we stop the fundamental results so far. We want to quickly go to the market to look at what is actually happening in the market now as to speak, and also what you also should do when it comes to you using technical analysis to trade or to invest. It depends what you are. Whether you are trading, you need it. Whether you are investing, you need to combine technical analysis and what and and the and the fundamental. As we speak now, the market is in red. There's a pullback already, and I'll tell you, our market is trading around the 49,000 as we speak now. The market is doing around 49,000 at this point, 49,888, 800 and 889.89 points, and also market is down by 480.4 points, representing about 1% red. For me, this is what the market is doing now. But if you look at the market red is positive, but because of pullback in stock like BUA, despite the impressive number BUA release, I'll tell you that BUA is down this morning, and that is what has impacted the market to be in this position. BUA leading the losers as we speak. We're having 16 gainers and 11 losers, and in that 11 losers, BUA is stopping that that chart, 10% of that, followed by MC Nico, then the International Brewery, UACN, then Sterling Bank. Others in that category are Vitafoam, UBA and FBN Holding. These are the stores that are putting pressure on the market. But in terms of market breadth is positive, 16 against what? Against 11. And the top gainers for today at this hour is Capaton, followed by Corby, Business Solution, FTM Cocoa, Japan Gold, and Wasi Regency. You can see these are what are local stocks that are in that category. But Life of Zenith and others are there, but because of the kind of decline in the price of BOA this hour is what is pulling the market. And just like what also happened to what we call MTN last week, when MTN was before the banded Friday to close at 210. We see that this morning the life of BOA is the one pulling the market. I always say that when you see all these high cap stocks, that especially those that has about seven of them that has about almost 70% control of the market. Whenever any of them loss or gain, you see it has the way of reflect. That's why I said always look at your industrial sector, index, and at the same time individual stock and industry when we are investing. This pulling back does not that the market is totally bad now, but because one of the high cap is down, that should not send panic to the market. But I believe that this is not what we call a bootstrap, as people call it. But we expect that liquidity will come to the market when the big boys are in the market. That liquidity will support also the rebound that we just saw on Friday, but did not sustain this morning. As we speak, market has pulled back. But if you look at the top trade charts, I will not discuss without my top trade. The top trade we are seeing that Access Corp, UBA, GT Code, Zenith Bank, and FBN Holding are the top trade, and these are banking sector. You know what happened last week? The banking sector as at Friday had about 6.6%. Just that is because most of them are pulled back below even their book value and all. You can see they are undervalued, and at the same time, because of what we're expecting trade dividend from them, it becomes cheaper, and the dividend yield of most these banking sector also were impressive for that. So they kind of jump back into them. I believe that also sustain them this week, especially as we're looking forward to see their result. And I believe that most of them also, their result, I will tell you, are good. And when they hit the market will react to it. But because it's a trade dividend, might not see that much reaction. But those PFAs and those people that are long-term investors will not take position for the trade dividend. They might likely not to go out of these banking stocks and wait. Especially we expect the banking sector numbers to start improving because of the rate hike. But because of also slowdown liquidity in the economy, so I'm also looking at this also might increase their non-performing loan, that where they be making more provision. But it depends. But I believe that most of the company banks have done their due diligence, that their way of kind of risk management has improved. I believe that we'll see the impact of the increase in rate of more than non-performing loan, because I'll tell you the sector where they play more is the Treasury B, and Treasury B yield has remained up direction. That's going to impact on their interest income at the end of the day. That is what will help the banking sector go into the future. That how to invest. Don't panic. I see opportunity in that sector also, for you to take advantage. Yes, quick one. We're coming to our technical analysis, which is very, very important. And don't forget, I've taught you a lot of rules when it comes to equity investment. That here today now I want to call up our indicators to use for analysis. And these indicators are very, very important to us so that you understand how to use them. Today I want to call up the what we call the ADS, which we are seeing already there. I'll also call up the money flow index, and our money flow index will come up, and our what we call C line, which is the 8 days moving exponential. Let's reduce this to 8. That's what we are used to in this class, and that is what we use. Investdata. Yes, if you look at the daily charts now as we speak, you can see that the market try to rebound, but yet to break out what the T line. I can see it here. This on the 1 hour, on the day chart, you can see it. We're seeing a small volume here, not much at this hour. The volume today is not too attractive, too small here. But we believe that at the end of the day, you might see what the volume looks like. And not be afraid that because market in direction, many people are not selling, they're waiting to see what the market will do. And they've not seen the figures from many of the quoted companies. When we start seeing the big players in the market, after they have done due diligence on the numbers that are being released to the market, once that is done, we expect to see a more better numbers that will help the market. For me, it's a good one. There's no cause for alarm. These numbers have supported the market in the past 3 years, and they will not fail this time because they are becoming better and stronger, and that gives us a sign of a better payout. Yeah, for me, if you look at this, you can see the sign here. You can see that the ADS is almost reading it's above 20. For me, it's a good one. That means strength is coming back to the market on a daily time frame. We're seeing money flow, but because of the pullback now, we're seeing that I see that it's all looking down to around 26. This money flow that has gone low as almost below 18, around 17, but coming back on Friday and starting around 26. For me, it's a good one. There's no cause for alarm on that. But we want to quickly look at our daily and our hourly chart. What is our hourly chart telling us at this hour? You can see what the hourly chart is telling us. Before night, I see that it has crossed that on what the T line up, and but because of the pullback this morning, as we are seeing, I can see it here that the market is down around what I told you earlier, 44. You can see it here, but I believe the cost of Noboa, but the market is still that money flow is still strong on 1 hour chart. It's around 50, which I think that once that 50 and above, 50 point something, 52, it's a good one for the market. You can see that here, the two was not coming over, but for now you can see this what's it called, our ADS reading around almost 30. ADS reading around ADS reading around for me 50, 52, 50 rough. Yeah, okay. ADS reading around 53. It's a good one for the market. For on a 1 hour chart, for me it's a good one. There's no cost for the money flow is strong. And apart from the pullback here, you can see that it's today that it pulled back before night has crossed the T line to signal where the market is going. Let's see to the end of the day before the market will do like the market will close like. But I always tell you that when you are trading, you need to use your stop loss, use your resistance and your resistance and support level, use your moving average and all that to know exactly what to do. But I want to tell you that when you are using your candlestick, there are some elements that you need to confirm in the market in your chart that will guide you, because this will be the height when you are doing your technical analysis. You need to know how to combine this fact that we're going to share, because it will help you to know exactly the condition that the market is at that particular time, for you to know exactly what to, even when we are looking at one particular chart. After what we're going to discuss now, when you see 3 to 4 of this we're going to discuss now, we're going to read that out now for you. Once you see this element in the chart, you are good to go. Out of all, we're going to about 9 points or 8 we're going to discuss or read that for you. You see between 3 to 5 of the condition being met in your chart, or what you are doing, say that stock is good for you to jump in or jump out. Actually, before you jump into any stock or jump out, you need to do kind of a scan or kind of read the chart very well to know where the chart is going. One is that, what is the trend of the chart? Does that trend favor you? Is it a trend that favor you? Are you is the trend in your favor? You need to know that. You need to know that is that chart in your favor? Is what you are reading, the candlestick, is it consistent? Is the chart not side trending? Is it trending up? No, you need to understand where the chart is at that particular time. Also look at what is the trend of the market. Is the market trend in your favor? You need to understand, is this market trend in my favor? Like this morning now, I think the market has pulled back, but to see that the past few days market has been kind of pulled back below the T line. Before you now see now crossing off the T line and pull back this morning again on a day chart. Let me take a day chart. That will tell you that yes, market is not doing badly. You need to look at exactly also is support and resistance at your favor. You want to know, is it a breakout or just at a support level that want to pull back? That's where you look at, is the market at overbought and oversold region. You need to know, is that all these elements, is it met? Where is the T line? Where is the T line? Where is the T line and the price action? You need to know, is it in your favor? The T line and the price action in your favor? Is the market itself, when I mean the market itself, are we in a bull or the bear market? Which circle are we? It's very, very. Also, the economy, which sector, is one driving the economy. Once you look at it, because you are using your technical analysis to chart, this is going to go a long way to give you what is the risk, the risk and the reward ratio. Does that risk and reward also make sense to you? You need to know, does it make sense to you? If the risk reward does not make sense to you, you don't need to go in. You need to understand also, does it make sense to you? And then use other indicators also to confirm what. Don't use only just one indicator to jump in. Once you see a sign, use other indicators to confirm that. Once this your chart met this about 8 to 17 we have just discussed now, that will give you that you can go ahead with what with that the decision to go in or go out. Then quickly before time permit us, we want to look at what is happening in assets at this point. GTB, then these are banking stock. Then we look at Vital Food. These are the ones that are on the user chart this morning. Look at Boa Alpha Boa. Then we'll see Cavaton leading the pack this morning up. Let's time can permit us. You can go through them before we call it a day for today. I know that our time is fast spent, but just because of our discussion, let's quickly look at these few stocks that we just mentioned now. Let's look at Boa Cement and see the pullback, how far it's going to go. Is it what we can see? Let's wait. If you look at the Boa now, as to speak now, yes, Boa has been below the T line on the day chart. You can see it. And because this stock does not move regularly, you can't really chart it on a daily chart. You can quickly look at, let's take it to a week chart to see whether it will also give us a sense of direction. Even on a weekly chart, you can see that the movement is still here up and down, but you can see that it's attended for a long time before you make any change. As we speak now, it's trading below the T line. For me, the numbers are good, half year, but wait for a breakout for you can jump into the stock. For those, but the payout, also dividend payout, also consider it with the price is still okay, but the performance as at Q2 was a good one. But look at the chart, confirm a breakout before you can jump in for the stock. Let's look at the 1 hour chart for the week as we speak now. And so on the 1 hour chart, you can't read it here the way it's moving. Let's quickly look at the Access Bank, but Access Corp. Access Corp. On the 1 hour chart, the stock is still above the T line, which is good. Yes, you can see it here. That move aside of today. Let's see, that thought even as high as 9 something before trading now to speak now, like slightly below the 9 naira, around the 805, 895, 890. We're seeing it here now. You can see it here. This for one. For me, I can tell you that the stock on the 1 hour chart is still very strong. For me, it's a good one. You can see yes, apart from money flow is looking down, it's a good one on 1 hour chart. Let's look at the day chart, what the stock is saying on the day chart. On the day chart, even with the pullback, it's still above the T line. For me, it's a good one for Access Bank. On the day chart, it's above the T line. Yes, I see money flow coming up here from almost at below around even a 12 coming up to around 28, 30. It's a good one. One is entering the stock. Despite the pullback, I see that because of the dividend expectation and dividend and the half year results, and also the price looking at that is very cheap for me. Like the attraction in the Access Corp. Then I quickly look at what is happening in GT Code. You know that GT Code has in recent time we kind of on the downtrend, but we'll see that what we're expecting the half year result is anyway making a meaning to people. We saw a rebound here on Friday, but to speak now, on the chart, you can see it's already in red small likely. And also see that the ADS is not looking bad around 40. For me, it's also a good one for the stock, and way that the money flow is down, is looking down slightly at the read 40, 46 or turn around 45, 46, which is also good. But I believe that now that I crossed above the T line, still with the pullback, still above the T line or rest above the T line, you can now start looking up, considering to enter the stock because now the possibility of stock going up is high. Let's keep our finger crossed in that position. Even on a 1 hour chart, you can see like still above the T line. Yes, you can buy above this time, but once I cross below the T line, you need to start patient to come back before you can jump position. On a 1 hour flow chart, Mofon is still entering the stock around 28.30. It's a good one for the stock. Yes, before we finally draw the curtain, let's look at the Carbaton and Vital Food for see Carbaton. See Carbaton back again. On the 1 hour chart, Carbaton has crossed the C line above the T line. You can see it here. Phone start entering the stock, leading to entering on 1 hour chart. We are seeing this MACD, ADS. You can see that ADS also is above 20, above 20 point, which is trend is on this recovery. You can see it here. Let's look at the 1 hour, a day chart. We have seen the 1 hour positive. Let's see what is happening in the 1 hour. On the 1 hour chart, yes, it's green here, but here to cross the T line. I think we should also keep our eyes here to cross the T line. But seeing the positive 1 hour chart, to see if that is sustained today and during the week, depending on the strength of the number. To have not really looked at the number that came from that company. If the number is positive, but I believe that the future expectation of the company expanding into African country to start servicing presidential fleet for one of the African country and others. For me also partner with the Nigeria Army in terms of service and all those stuff. Their planes are important. For me, it's a good one for Abaton. If that is sustained, that will be good then for long-term investors and the medium-term. It's stuff that I can look at before before the end of the year. But let's look at the Vital Foam and the last one for today. Vital Foam. Vital Foam, the last one for today. Vital Foam formation, you can see this candlestick formation here for me it's a sign of weakness. You can see it went up, came down, it was set down here. It always try to rally now. It's in red. Now this is the chart. But let's just go to finish. The further rally, you can see that it slowed down even when it tried to go up. Now, but we can see that the ADS is still strong at 36. For me, it's a good one. And see that the blue one is trying to look up, only the upper is looking at what the cross up. And see this is what we are going to look at today. And see that even cross the red one up. It's a good one for a market, and money flow is strong here on 1 hour chart. On a day chart, I'm moving around 65. Let's see how it goes by for tomorrow. But let's keep our eyes on this stock. That is the third quarter result we have seen so far. Know that this is September year account. This number has also given us what we're likely to see at the end of September. And this is the last. We're already entering. We're already in the last lap of the financial year, with the last quarter for the year. If Q3 is also impressive, this we believe that the price will still rise up. I mean, they pull back to get opportunity for investors to take advantage of what is happening in Vital Foam. Yes, on this note, I'll say thank you. I will encourage you, to go and subscribe to our YouTube. Listen to analyst hangout that we did on Friday. I think it's interesting. I've seen people are calling on that. Also, their comment. Go and also subscribe if you are not there. So anytime we post any video on that channel, you have what you'll be alerted. Also, like I always said, when you see the link for this class, share as many as possible with your friends and colleagues so that they will join us in this class. I will say thank you and see you tomorrow. God bless you.